For over a century, the global economy has relied on massive physical fortresses to keep money safe and stable. But that traditional infrastructure is dissolving. We're seeing a massive migration of wealth into a borderless, largely unregulated space, known as decentralized finance, or DeFi. This shift is moving directly into the center of American politics. The Trump family recently launched their own cryptocurrency platform, World Liberty Financial. The project is explicitly designed to bypass traditional banks, and its white paper lists 18-year-old Barron Trump as its chief DeFi visionary. This move has already transformed Donald Trump's personal finances, earning him over $57 million in months. Today, digital assets represent 73% of his net worth, vastly overshadowing the real estate holdings that once defined his brand. This move places the vast majority of a former president's wealth into a system where every participant is effectively invisible. By building this infrastructure, the Trump family has entered a landscape where the standard rules of financial oversight no longer apply. This creates new types of exposure that the public is only just beginning to see. Forensic blockchain data shows that on January 20th, a wallet identified as Schreider.eth purchased $10,000 worth of World Liberty Financial tokens. This same address had executed 55 separate transfers to a digital wallet long associated with the Lazarus Group, the cyber unit North Korea uses to fund its weapons programs. It wasn't an isolated case. Other tokens were sold to a user who had deposited tens of thousands into Nobatex.ir, Iran's dominant cryptocurrency platform and a primary tool for circumventing international sanctions. A third high-volume buyer used A7A5, a digital asset pegged to the Russian ruble and designated by the U.S. Treasury as a tool for illegal financial flows. Internal risk controls at the platform appeared minimal. Despite these wallets being flagged by cybersecurity agencies, it took months for World Liberty Financial to initiate any blacklisting actions. The North Korean linked account was only restricted in late August, well after the transactions were complete. These records show how easily an American political figure's business can become a conduit for hostile nations. To understand why these transactions were possible, we have to look at the specific technology the platform is built on. In traditional finance, you cannot move money without a gatekeeper. Banks sit squarely in the middle of every transaction, acting as friction that keeps the system legal. They must verify every user's identity through Know Your Customer protocols and actively report suspicious transactions. These rules are enforceable. In early 2025, the SEC and FINRA hit the trading platform Robinhood with nearly $75 million in penalties for failing to file suspicious activity reports and neglecting its supervisory duties. We often view these regulations as slow and expensive bureaucracy, but this institutional friction is the primary mechanism that prevents global cybercriminals from easily moving funds through the American financial system. Decentralized finance removes the human gatekeeper, replacing the institution with a smart contract, self-executing code that automatically performs trades. Without the institution, you remove the checkpoint. In DeFi, there are no ID checks. Every user is pseudonymous, identified only by digital characters. This lack of oversight allows fraud to scale with terrifying speed. Look at the Forsage platform. It used smart contracts to automate a $340 million Ponzi scheme. Because the logic was baked into the code, the fraud executed perfectly until the money ran out, with no central authority capable of stopping it. In the case of the Trump-affiliated tokens, buyers used this anonymity as a shield. At least 60 purchasers routed their payments through Tornado Cash, a tool designed to scrub the origins of digital funds and make it impossible for investigators to see where the money came from. Replacing legally accountable institutions with blind automated code doesn't just reduce fees, it effectively neutralizes the tools used by international law enforcement to track the movement of illicit wealth. This structure bears a striking resemblance to the unregulated shadow banking system that contributed to the global financial crisis in 2008. By moving credit creation away from regulated banks, the system allows risks to accumulate in the dark. One major vulnerability is one-way out lending. In a traditional bank, a loan is backed by your income, your ability to pay it back. In DeFi, loans are backed entirely by volatile crypto assets. If the value of that collateral drops, the system automatically triggers liquidations, which can lead to a cascading market collapse. The involvement of the Trump family adds a layer of political risk to this financial instability. When a former president personally profits from unregulated platforms, it creates significant questions about how future policy will be shaped. We are already seeing these policy shifts in action. In early 2025, the administration reversed Biden-era Treasury sanctions on Tornado Cash. This move effectively reopened the same pathways that the North Korean and Iranian-linked buyers used to scrub their transactions in the first place. The combination of political branding and unregulated digital finance creates a level of geopolitical exposure that the current regulatory framework was never designed to handle. The goal of regulation shouldn't be to destroy DeFi. The technology offers genuine breakthroughs in speed and efficiency that could modernize the entire financial world. But if we remove human intermediaries, the code itself must take on the responsibility. Experts suggest that compliance mechanisms must be hard-coded directly into the platform architecture, creating smart contracts that automatically reject transactions from sanctioned or unverified sources. Ultimately, the developers and high-profile promoters who launch these systems must be held legally accountable for the code they put into the world. Until these protocols are forced to automate legal compliance alongside financial trades, the democratization of finance will remain a massive vulnerability, leaving the door open for global financial crime to operate in plain sight.